A new report from the Wall Street Journal shows Quinnipiac University being at the top of its class when it comes to returns on university endowments. As of last June, the Connecticut school's endowment brought in 6.1% annualized gains for the last decade. That includes the financial crisis, putting the returns in the top 10% of all U.S. schools. The school credits success to stock pickers. Is that a good sign for active investing? Joining us is Dr. John Lahey, president of Quinnipiac University. Welcome to you. And is it Quinnipiac or is it Quinnipiac, doctor?
It's Quinnipiac with the accent on the first syllable.
Quinnipiac. Okay, I will get it one of these times. Every time you guys do the poll, I have the same question. Anyway, that is what you're best known for. Now it's the stock picking. This is pretty extraordinary. What do you think accounts for the success?
Well, I think we have an outstanding investment committee made up of trustees headed by Bill Spears, and they have a bias towards equity and a tilt toward value stocks. And I would say we really have an asset allocation that's typical of endowments 30 or 40 years ago. We have 50% U.S. equities, 20% international equities, so 70% equities. If you compare the asset allocation of the Quinnipiac endowment to most of the Ivy League schools, they would be in the 10–15% equity range at the most. So we tend to avoid the more esoteric alternative investments, private equity, venture capital, and oil and gas,
and the Yale model,
real estate.
You're the opposite of the Yale model.
I am, although I'm a big fan of David Swenson, and it works for Yale. But it doesn't work for Quinnipiac. We're smaller. We don't have access to the same kind of deals that they have. And so for us, and we don't have a large staff. I mean, we have no full-time investment officers at Quinnipiac. I and my chief financial officer are the two people who look over the endowment, and we rely heavily on our trustees, Bill Spears and others who are in the business of picking individual managers who then become stock pickers. And for us, it's a lot easier. It's much more transparent stocks. It's less esoteric. They're more liquid. And for us, we have a comfort level around them. And obviously, the results speak for themselves.
Mike, what stands out to me is not just the 6% over the last decade annualized return, 17% return, 99 to 2017. They did 20% in fiscal 2017.
No, by any measure, it's very good performance. I guess, you know, the trade-off that a lot of endowment managers view is that they can't deal with a bear market. So they just simply cannot sustain, if they stress test their endowment levels, for the entire market going down 30 or 40%, because they rely on it. They need to draw from it to cover operating expenses. And I just wonder, John, I mean, how does that come into play with your thinking? Because honestly, taking nothing away from what you all have achieved here, it sounds like kind of a bull market story. Small school in Connecticut beats the market by just picking stocks.
Yeah, well, what's interesting is in this downturn in 2008-9, you would have thought that. And you would have thought, therefore, that the diversified endowments of the Ivy League schools would have protected them better on the downsides. But if you look at the Harvard and Yales and all the Ivy League endowments, they went down by the same 30% that all the other endowments went down by. In addition to that, Quinnipiac, which was heavily, again, in equities, we went down by 30%, but it only took us 1 year to get back to our 2007 levels. So by 2009, we were back to where we were pre-Great Recession. It took Yale and Harvard and those institutions 7 to 10 years to get back to the 2007 levels. So I don't know whether this last Great Recession was unique, but I will say, as heavily dependent on equities as the Quinnipiac endowment is, we didn't do any worse on the downside than these other far more diversified portfolios of the Ivy League schools.
And we've learned that, again, the Yale model works for Yale, not necessarily for everyone else. I'm just wondering if there's some Connecticut school rivalry.
For me?
Yeah, brewing here.
I try to remain objective about such things.
John Lahey, thank you for joining us.
There's a big rivalry on the hockey. There's a big rivalry on the hockey ice, I can tell you that. So.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.